The Australian Financial Review.
Hello, I'm James Thompson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today, as always, is my Chanticleer colleague. He's cleared for takeoff and ready to soar. It's Anthony McDonald. How are you, Anthony?
Thanks for letting me right up the front with you today, James.
Absolutely. Well, this week we try to explain what's coming for Australia from the AI revolution. We reveal the biggest winners from the float of Virgin Australia, and you'll never guess, Trump and Musk's bromance is over. But first, Anthony, the GDP numbers came out this week, and we got a fresh look at the health of the Australian economy now. Dr. McDonald, what's your diagnosis?
Bit sluggish, James. Economy, she's looking a bit off. A bit anemic, lacking a bit of iron, not a great colour. The economic growth in the March quarter was weaker than expected, James. GDP about 0.2% for the quarter, or 1.3% for the 12 months to March 31. And GDP, that growth actually decelerated in the quarter. Why, James? It's because government spending backed off. The private sector is still pretty soft. Productivity is poor. Wages are high. Put all that together, and while it's good, inflation's back in the range. The economy, it's taken a bit of a beating. I guess that explains why the RBA cut rates in February and again in May. And it's a bit of a quirk, isn't it, that in this day and age, we're getting March quarter data 2 months and 1 week after it happens. But
good point.
Think about everything that's happened since the end of March, James. You know, that was pre-Liberation Day. So yeah. we are looking at historical data here, but I think, James, it ramps up the rate cut calls. I mean, the good news is the RBA started the quarter with the rates at 4.1%, now back to 3.85%. There's plenty of room to cut more if required. The next meeting's on July 7 and 8, 1 month's time, and I think we'll see the odds of a rate cut shorten as we get closer to it. What do you make of it, Dr. Thompson?
Well, look, I think your diagnosis is pretty good. I mean, we're just, it's the middle of winter. We all feel a bit run down, and so does the economy. We're stuck. We're stuck in low gear. We've been stuck in low gear for a while. I was chatting to the Financial Review's economics guru, Mike Reid, and he doesn't buy into the per capita recession type thing. He doesn't think that's the greatest measure of the economy. But look, I mean, we've been sort of just going for about best part of 18 months. I don't think it's any surprise. I am a bit surprised, though, that the Treasurer, Dr. Jim Chalmers, to give everyone their right honorifics, I mean, he's out there describing the Australian economy as world-beating. I mean, I guess that we're not China or America, and that's a good thing, but I don't see anything world-beating here, Anthony. I see a lot of work for the Treasurer and the Prime Minister to do to try and get the private sector firing again. Surely that's got to be the big focus here. I wouldn't be claiming these numbers as world-beating, would you?
No, absolutely not. The headline numbers are not world-beating. That's a fact. And James, late this week, the most predictable event in the history of business, finance and markets, and probably politics and humankind, happened. US President Donald Trump and gazillionaire Elon Musk have fallen out and been trading barbs on their respective social media platforms. James, at the heart of it is something called the Big Beautiful Bill. Please, can you explain, what is the Big Beautiful Bill? And why has Elon Musk, the man who pumped millions into Trump's re-election campaign and led the Doge Razor gang, why has he hit the roof?
Well, I think he's hit the roof because he's been kicked out of the gang by the mean girls in the White House, basically. I mean, this has got all the hallmarks of a schoolyard spat. Elon's a bit nuts. Trump's a bit nuts. They've fallen out. Trump's given Elon his marching orders, and I think Elon spat the dummy. And now all of a sudden, after sort of supporting every Trump move that came in the first 130 days of the administration, now he's decided, as you say, he doesn't like this Big Beautiful Bill. So the Big Beautiful Bill is the centerpiece of his administration, really. It delivers tax cuts, and then over time it delivers spending cuts. But what it doesn't do is help rein in the budget deficit, which is what Trump's promised and what Elon's Doge Razor gang, as you say, that's what it was all about, trying to get the budget deficit down, get the government spending back into line. So Yes, the one beautiful bill is sparked the argument, but now it's just spiraling out of control. So on Thursday night, American time, Friday morning, our time, these guys were hurling insults at each other in real time on social media. It was great to watch. You had sort of Trump threatening to cancel all of Musk's contracts with the government. Musk comes back and says that Trump is in the files of the US government, has collected about the convicted pedophile Jeffrey Epstein. Trump comes back and suggests, Elon's sort of ungrateful and they were best buddies and what's happened. And it ends with Musk it ends at this stage with Musk suggesting that Trump should be impeached and JD Vance should take over. Meanwhile, Anthony, if you're an investor in Tesla, which, let's face it, millions of Australians are through their superannuation fund, 14% of the company's market value, 150 billion US, has been wiped off overnight. I mean, this is... Musk has played with fire here by backing Trump, and shock horror, he's now getting burnt. I mean, this is a mess, isn't it?
Total mess, James. I mean, the spat itself, I think everyone saw this coming.
Yeah.
And now it's playing out publicly and it's ugly and predictable and, it's not something that's enjoyable to watch at all. But at the heart of it, James, like this big, beautiful bill, it's hundreds of proposed changes.
Yeah,
all wrapped up together. It's actually pretty important, and the whole thing's playing with fireworks. I reckon, James. It could be beautiful if it works, but it could also explode in the US's face, big time. Yeah. If you cut taxes, do you accelerate the economy and increase the tax take, or do you just make the deficit problem bigger?
Or both.
So that's kind of or both. Yeah, that's kind of at the heart of this whole thing. So. As for Elon Musk, I mean, he's also got a financial interest in this fight. Part of the big, beautiful bill is winding back subsidies on electric vehicles. Musk's Tesla obviously makes electric vehicles, so we can see how this could hit him in the hip pocket as well.
All right, choose your fighter here, Anthony. This will play out over the next few weeks. Who do you want to back? The world's richest man or the world's most powerful man?
The world's most powerful man.
Yeah, I agree. I just don't. I think Musk has badly overplayed his hand here. It's not going to end well for him, but let's see. All right, Anthony, let's move to our first topic. And on Tuesday in Sydney, the AFR hosted its second annual Artificial Intelligence Summit, which featured a string of big speakers from the tech sector, from government, and of course from the top end of town, including Telstra's Vicky Brady and Commonwealth Bank's Matt Comyn. Now, Anthony, I've got to say, I was blown away by this day.
Yeah.
Totally full room. They were engaged the whole day and just so much big picture stuff to think about. And I've got to say for me to worry about. But Anthony, before I do my usual thing on the podcast and bring the mood down, what was your big takeaway from the day?
Jeez, you give me the big picture question, James. That's dangerous. Google people don't wear dress shoes, even the high-up ones.
Good point.
The big picture, mate, there's a lot of money in AI. Gee, it's big, full room, great sponsors, very good speakers. A lot of these people are trying to work so fast to sell this stuff, to really establish themselves as leaders. It's a booming industry, James. It's unlike any other, I would say, in terms of what we do in our conferences and summits. And in times like this, the thought leaders are also the salespeople, aren't they? Like we sat there and we listened to, companies like Google, Salesforce telling us all about it. Or we sat there listening to people like Telstra's Vicky Brady, CBA's Matt Comyn, who are just back from trips to the US, hearing from these big tech giants about how fast it's all moving. And makes you sort of wonder, who's talking about it that isn't making money? And we had the Minister, Tim Ayres, at the summit, but, he's 2 minutes into the job. So, I mean, to be fair to him, he didn't have that much to contribute. And that's understandable given that he's just taken the portfolio. But, I mean, the big takeaway, James, there's just so much potentially transformational change going on here. And it's started. Those that are selling it, those that have heard the pitch firsthand, they're telling us this is the fourth industrial revolution. Even KKR's CEO, who we met this week, was telling us this is bigger than the internet, James. And generative AI really kicked it off. That's the large language models that create the content, text, pictures, videos, etc. It's a couple of years ago now. Now it's agentic AI, creating agents, making decisions, replacing human beings, not just generating content anymore, but actually doing stuff. Yeah. Vicky Brady, fresh off her trip to the US, she said, things that she's in the middle of Australia's sort of tech industry. She
Absolutely.
said things that she thought were a year or two away are actually happening now. It's coming. The big change is coming. We need to get ready for it. That's excited. I'm excited. And I'm not even wearing dress shoes today, James. A hat tip to our mates at Google. But I feel like there's something else going on here, James. And you might go full doomer on us here. What's got you worried?
Well, look, Anthony, I think what's got me worried is the speed at which this is happening. You think about, often you hear the argument about AI like, don't worry, we've been through periods of technological change before and they all worked out, the steam engine, electrification of the economy, the internet, the world's a better place after those things, or so that argument goes. I totally get that. And I think my great hope is not that we have some great strategy to get through this, but that we just muddle through it and we find a way and we adapt and we do what humans have done for thousands of years and done really well, which is just figure it out and get on with it. That's probably true. But the one thing that gives me a bit of pause is the speed at which this is happening. It's not like the electrification of the global economy. That took 4 or 5 decades. Mm-hmm. It's not like the internet. It took 2 generations really to have a really meaningful effect on the global economy. This is happening in the space of, it's 30 months since ChatGPT was released. And we've gone from, oh, isn't it cool that I can make a picture of, Anthony dressed as a superhero, to agents coming in to take people's jobs. 30 months. Countries and companies are slow-moving beasts, and I think this is one where that lack of speed will hurt us. As you said, we had lots of people at the summit selling the idea of AI. I think that's fair enough because we're all trying to figure it out, and certain people are trying to make money of it. No problems with that. I liked one of the speakers I had on my panel, Leal Yarsley. She's been working with AI for 20 years in one form or another. Mm-hmm. Her point was that, we went from an agrarian economy sort of in the 1800s to an industrial economy. We went from farmers to workers. Now, 95% of us work with our brains, and that's what AI is coming for. So the size of this disruption is pretty big. Now, I think we had a lot of different views on whether this is sort of going to wipe out a big swathe of jobs. And I think that, it's totally up in the air. No one's got any real idea. But I kept coming back to what Matt Common said. It's okay if you dismiss the predictions from the CEO of the big AI developer Anthropic, who says unemployment might spike to 20% within 5 years. That's okay if you don't believe that. Totally fair enough. But the question we should ask is, what if he is right? Anthony, this is what I keep coming back to. What if he's right? Do you think we are ready in terms of the infrastructure we need, the power we need, the policy settings we need? And I just want to ask you on the back of that, we had a great listener question from Melanie in Victoria who speaks to this topic. AI's discourse, she says, often focuses on job losses and automation risk. But how can we reframe the national conversation to address how AI will change jobs, reshape career pathways, and elevate the importance of distinctly human capabilities like empathy, storytelling, ethics? What role should education and policy play in preparing our workforce for this era? Great question, Melanie. Anthony, do you see us talking about this? Do you see the move in government policy or the general community to say, let's be ready for this stuff?
Well, we definitely need to talk about it. If you just look at the jobs bit that Melanie talks about there, James, there's no point hiding from it, right? This is designed to take out jobs. There will be a change in the workforce. If they are right, if we should be preparing for large-scale job losses, market disruption, then definitely, all right, start using the AI tools now. Companies can start training their staff on the AI tools. Just get your head around what these products actually look like, what you actually need to be able to do to understand them, to use them better. And then also it's up to companies to start thinking about if our staff in certain jobs are going to lose them to the AI agents, where can we deploy them? What's the future? Where are we going to be hiring in the future, and start shifting them that way? So we can't hide from the job losses and the change in the workforce. And I think it's healthy to be talking about it. There is no point waking up in 3 years' time, we've got a litany of job losses and we're like, where did this come from? We may as well be prepared for it. In terms of the wider infrastructure, that you asked about, James, I mean, we're absolutely not ready. Look at the energy system. Like, without being too alarmist, it is dated, held together by sticky tape. It's relying on old and aging and unreliable coal power stations, James. Some of the biggest, which were supposed to have been retired a few years ago, but we just can't switch them off because we want to be able to keep the lights on 24/7. I mean, that is a fact. You know, the energy transition, it's happening, James, but it's such a big job, right? And there's so much to do. We don't have enough firm power. We don't have enough storage. We're great in the middle of the day when the sun's shining, when the wind's blowing, but we fall short at other times. And so there's investment that's going into more renewable generation, into storage and in transmission, James, but the job's massive and we haven't transitioned the grid at all. So if you start there, if you look at where we are today, what the AI crew want us to think is a pretty analog or digital light world compared to what is coming.
Yeah.
Everything to do with AI requires power, James. It's electrification of everything, literally electrification of workers who are your agents, not people.
Yes.
You know, these agents are going to eat electricity for lunch, not sandwiches. So then you add in the actual infrastructure you need to house the data, the machines, the learning, you know, the data centers. They're huge power suckers that run constantly. Even when the wind isn't blowing, even when the sun isn't shining, these things need power.
Exactly.
Now, AEMO, which oversees the Australian energy system, it isn't too alarmed about it. It says, don't worry too much about the data centers. They account for only a couple of % of Australia's energy usage, and that's fine, James. And they say maybe it gets up to 10% in the next couple of decades, which also doesn't sound too scary. But that's another 10% of something we already don't have right. So I wonder, with the way that everyone's talking about agentic AI, the way that forecasting works, if Vicky Brady's right and all this is changing incredibly quickly, do we need AEMO and that to rerun the numbers, you know, every week or every month so that we're used to it?
Maybe.
We are. I mean, we are tweaking the policy settings slowly, you know. Obviously, we spoke about last week the week before about gas as the backup source of power generation. I mean, we're freeing that up a little bit, but, you know, clearly there's more reform needed. Now, James, you asked a few people at the summit what advice they'd give to a teenager about the world of AI. And it's interesting because you were asking, you know, CEOs, top investors and the like. Now, what advice did they have?
Well, I think this goes a little bit to Melanie's question, actually, Anthony. I mean, basically their advice was jump in. I mean, I think Craig Blair, who's a partner and co-founder at a venture capital firm, Airtree, his suggestion was kids need to become AI ninjas. They need to be completely familiar with all the tools. How do they work? What are their limitations? When can I use them? Where can't I use them? Where should I question the answers that they give? So I think that was the general gist. Like, don't sort of hide and pretend it's not coming and hope you can develop other skills that don't require AI. This is going to be part of everyone's life all the time, and so get used to it. I mean, I think it's good advice, actually, Anthony, for adults. I mean, everyone should be having a muck around with this stuff and getting used to it, because I don't think it's too long until lots of Australians are going to be asked to use this stuff in their job. And I think, just coming back to Melanie's question about education and policy, I was really impressed by, Vicky Brady from Telstra said, our workforce is going to be smaller because of AI in 5 years. You know, she doesn't know how much smaller, doesn't know what it's going to look like, but she does know that in the next 5 years, she's got to spend a lot more time training her people on AI. They've got an AI academy. She said they've put 20,000 people through it to get them some skills. Now, I don't see anything like that from the government. I mean, perhaps we should even be trying to get this stuff into the official curriculum of our schools. Like, you know, I know that most teachers have treated AI with sort of fear and skepticism. You know, is it helping kids cheat and plagiarize? Maybe we need to flip that and start teaching kids about, you know, how to use AI, where to best use it, what it can and can't do, what are the limitations. We could make this part of the official curriculum. I mean, I take your point about Tim Ayres, the new Innovation and Industry Minister. He's 2 weeks into the job, okay. But I just thought the tenor of his address was totally wrong. There was no sense of urgency, no sense of, I'm going to make this a priority. Well, or not enough of a sense of that for mine. I just thought that the tone was wrong. Sure, he couldn't go far on the substance, but I'm just not feeling the sense of urgency that people like Matt Common are trying to get across to us. Something needs to change here, and it needs to change really quickly. Your point is exactly right. We don't want to wake up in 3 years and say, geez, we missed this, didn't we? Which I fear is where we're going. So, look, if nothing else, big wake-up call. This stuff is here. It's changing really quickly. Let's get on with it.
All right, James, for our second topic, the IPO we've been talking about for 2.5 years, it's finally here. Yeah. Virgin Australia, broke in the pandemic, is back, leaner, meaner, and promising to be a better machiner. James, owner Bain Capital, one of the big private equity firms, it's floating the business. It's raising $685 million by selling 30% of the company in a deal valuing it at $2.3 billion or 7 times forecast profit. James, what'd you make of it?
Oh, look, how good is it to have a meaty IPO back?
Oh, yeah.
Everyone I talked to on when this news broke, even the people who don't want to buy Virgin shares, those fund managers were saying, how good is it that we get to look under the hood at this business and make a decision and see a big company come back to the ASX? Great for the market, great for Australian business. Let's make no bones about it. This is a great turnaround story. This thing was in receivership in the pandemic. It was totally cooked. Kudos to Bain. Kudos to Jane Herdlicker for turning it round. I think they've had a bit of luck in the last little while.
Yeah.
I don't know if you've noticed, Anthony, but Qantas shares, record highs. Mm-hmm. And so when the obvious listed peer is shooting the lights out, well, that makes it a hell of a lot easier to go to investors and say, have a look at this, my friends. Wouldn't you love a chance to own the other airline? The oil prices come down. That's really nice. And look, Liberation Day is just a memory in the minds of equity investors. So, look, it's good to see this one back.
Good to hear you pumped up, but hang on, James. Do you remember what you said about this 6 weeks ago? Let's have a listen.
I'm not sure. I'm with you. If they manage to get this float away in June, under the threat of tariff wars, with US airline stocks in the toilet, with investors skittish, then there needs to be a statue built in Martin Place or in Collins Street with the team of bankers behind this business and perhaps Bain Capital's CEO as well. It'd be a fair effort.
So, James, who are we building a statue of? Is it the bankers? Is it Virgin CEO Dave Emerson? Bain Capital's Mike Murphy? Scott Morrison? He didn't bail them out in the pandemic. Is it Vanessa Hudson, Donald Trump, your mate Scott Bessent? Who are we talking?
Well, Anthony, thank you. I thought we were friends. Thanks so much for bringing this up. But you'll be surprised. I've had a lot of messages about statues this week. I think the Bain Capital team took my statue call as a bit of a personal affront or perhaps a personal challenge. Look, to be fair to me, the world was in a pretty different place back then. We just had the Liberation Day announcements.
Yeah.
Equity markets were plunging. I stand by it. It looked like at the time the worst time ever. But things have turned around, and well done to all the bankers here. Look, I think success has many parents. Bain Capital CEO Mike Murphy, he probably needs a statue. There's some bankers out there. From what we're told, Anthony, from the fund managers, the new Virgin CEO Dave Emerson has done a great job selling this to investors with his executive team. Jane Herdlicker, look, she was the one who took the big punt and steered this, put her reputation and name on the line and steered this out of disaster as well. Very impressive. But, Anthony, you've written a lot about this IPO and you've followed all the twists of the turns since the summer of 2023 when it all started coming together. Why do you think they've been able to get this over the line now in light of all that turmoil?
Well, just firstly, if it's true that you did fire them up and they won the premiership, James, they should be building a little statue of you in their office, I think.
I don't think so.
Why this got up, though, James, it's really simple. It's just price. They've put this out as a 30% discount to Qantas. And when we talk about price, James, we're talking about the multiple of its earnings. So at the moment, you pay 10 times this financial year's earnings to buy one Qantas share, and you'll pay 7 times this financial year's earnings to buy one Virgin share. So Virgin is 30% cheaper than Qantas. It's that simple. That's a good discount. That's why the deal's getting away. Now, in recent years, James, vendors, so those people that are listing their businesses, they look at something like the high-flying Qantas and say, all right, if Qantas is worth 10 times profit, my business is worth 10 times profit. We compete in the same routes. We fly similar planes, have similar margins. We're worth the same.
Yeah.
Virgin's owner Bain has gone, okay, Qantas is trading very healthily. We can use that to our advantage. We can still get this deal done at 7 times, which is a very respectable multiple in normal markets. Sell a 30% stake, keep 40-odd% for themselves, see how it goes, and happy days. And the real reason they can do that, James, is because they've made so much money already. Right? Remember, they bought Virgin out of administration. They got their money back 2 years later. Then they made about 2 times their money when Qatar came in and bought a quarter of the company, a deal that settled only a couple of months ago. They probably make another 1 times their money just by taking money off the table at the float here, James, and they still own 40% of the business. So if you add all that up, they got their money back and they've made probably back of the envelope 3 times their money already since then. They still own 40% of the business when it lists. So they're doing really well. You know, they took a lot of risk at the time they came in. They executed a turnaround. They did an environment of high wage growth and consumer sentiment being okay, but not brilliant. They've got Virgin on stable footing. You know, I mean, so it's a win for high finance. It's a win for big business. It's a win for capitalism here, James. But the big question in my mind is how long is the aviation market going to stay like it is, right? You've got 3 players. They've got about a third of the market each. Each has got their spot. Each is making good money. Virgin's nicely wedged between the top of the market Qantas and the bottom of the market Jetstar. Obviously, those 2 brands are both owned by Qantas. You know, it's found its place in the middle. It's all very rational, sensible. Shareholders of all the companies are pretty happy. No one's upsetting the apple cart. At some stage, James, it will get upset. Someone will do something. What happens then? You know, how does Virgin respond? Does it go out all-out attack? You know, does it get bigger and into areas it's sworn off on, like international routes, domestic lounges, the expensive stuff that brought it down last time? Or does it get more defensive and go to the bottom of the market and take on Jetstar? So, I mean, that's the thing to watch. It's getting away, though, because of price. But, James, it was pretty ironic, wasn't it? Like, we sit here all the time and talk about public markets versus private markets, you know, and how the private markets have got more momentum at the moment than the ASX. This deal launched on the same day, the exact same day that ASIC released 50 submissions into its public and private markets review. And in a lot of those submissions, they were pointing out problems with the public markets.
Yeah.
And yet here we are, we have a business like Virgin coming to the market, wanting to IPO. Now, was there anything in any of those submissions to this ASIC review that caught your eye?
Oh, look, I mean, I think there was a lot of self-interest. That'd be my main point.
Yeah.
The people who are big in private markets, they're quite happy for ASIC to just stay on the sidelines, no more regulation, please. The people who are in public markets, they're worried about the health of the public markets. And I think your point's valid. Virgin shows the public markets are far from dead, but they are very concentrated. I mean, this week we've seen CBA become a $300 billion company, our first one ever.
Yeah.
And that just goes, I think, to the extraordinary concentration in a few very large stocks. We're seeing that right around the world. We're seeing it in Australia. But there's still an opportunity. I think you're totally right. This Virgin deal says there's still an opportunity for good companies to make their pitch to investors at the right time. So I think maybe this is a bit of a balm for those concerns about the public markets. I mean, Anthony, do you think the Virgin IPO, if it gets away smoothly and trades well, does that open the door for other companies to hit the public markets? Do we see more IPOs?
Oh, that's definitely the question to ask, James. There's a lot of people watching, particularly private equity, right? There's a lot of assets in the private equity sitting on. They haven't been able to sell in recent years. There's no strategic buyer that's chomping their arm off to try and buy them. So the obvious exit is putting them back into public markets and selling them to everyday punters. it's funny, James. Like this Virgin deal's launched this week. There's other IPOs that are out there. There's another one called Gem Life, which builds these communities for over 50s to move into. That's been out there this week, James, trying to raise a bit more than Virgin, $750 million or so. So there is signs of life in the IPO market. Virgin, though, because it's got such a big brand, because we're sitting here talking about it, because everyone's focused on it, what happens there is going to be seriously important. If it goes well, get ready for the private equity onslaught, I reckon. There's plenty of businesses, like I said, sitting in private equity hands that haven't been able to move. So think Green Cross, right?
Yes.
Pets, retail, and also vets. Things like My Muscle Chef. I'm not sure if you're across My Muscle Chef, but they do those healthy sorts of meals, high protein in supermarkets. You know, scan through all the private equity firms' portfolios, James. Anything with a decent brand and decent sort of awareness, you know, like Virgin has, that could have broad appeal, I reckon you'll see those dusted off. But the thing you need, though, with the floats, James, like price is incredibly important.
Yes.
You need a bit of a hot theme, right? So what's running at the moment? At the moment on the ASX, running pretty hard is this invest in Australia, domestic earnings sort of thing.
Yep.
Virgin's got that in spades, right? It is basically a play on the Australian consumer, boomers, travel, etc. So watch people sort of twist their stories around whatever's running on the ASX in the next couple of months.
So it's all going to depend, Anthony, on how Virgin's shares go on listing day, right? So they're priced at $2.90 a share. Obviously, I'm very gun-shy about making predictions when it comes to Virgin now. But first day of trade, do they close higher or lower?
Yeah, like really hard to say because like anything could happen. Like look at Trump and Elon and all the oil price, currency, etc. As it is though, there's demand for these things getting away. It should trade a bit higher.
Yeah, I agree. And 1 year's time, is it higher or lower?
I think it'd be higher, James. I'm a believer in the domestic travel story. I'm a believer that you've got these 3 airlines that are acting rationally and doing well and don't want to blow that up just yet. So I think it'll head in the right direction. What about yourself?
Yeah, I think oil prices are probably a bit of a determinant. But I think a lot of where Virgin ends up will be about where Qantas ends up. And why I say that is a lot of the theory here is that Virgin can stay rational. You know, it doesn't need to drop its prices and fight for market share because Qantas needs to stay rational. It needs to stay rational to keep the cash flowing so it can pay for these lots of new planes it's got on order. So I think for a year at least, I think that rational market behaviour can hold and perhaps we could see Virgin's shares creep higher. But the fact that Qantas shares are at that record high, that would give me a little bit of pause. That gap between Virgin and Qantas will probably be reflected in the market pricing going forward, well beyond this float. But it's going to be fascinating to watch, Anthony, and I'll be spending the weekend melting down bronze to start casting these statues. So that should be a good long weekend for me. Well, look, we'll be back after the break. We've got another big week coming up. Some really interesting economic data and a big powwow for the investors in Australia. Back in a sec. Welcome back. If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Saturday morning, the newsletter pulls together the best Chanticleer columns from the week and delivers them straight to your inbox. All right, Anthony, Tuesday night, we're both going to be at an ASIC symposium on private capital. So this follows on from that work we just mentioned. They've put all these submissions out. They're testing the market. Be interesting to see. I think we're going to have some investment bankers, some regulators, some academics. Be interesting to see how the mood's shifting on private markets and public markets after things like the Virgin float, right?
Absolutely.
Wednesday and Thursday, Morgan Stanley has its big Australia Investing Conference. Anthony, I think you're getting along. Anyone you're particularly looking forward to seeing?
Your mate Howard Marks is up from Oaktree.
Oh, hey.
But on the agenda, it's all the themes you'd expect: AI, energy, what we've been speaking about today, actually.
Yeah, good stuff. And then on Thursday, we get the latest reading of unemployment. The last one was 4.1%. Are you expecting much movement here? The story really is the labour market's still pretty tight. It's probably the one thing that I'm not sure the RBA wouldn't want the labour market to loosen, but in terms of their concerns about inflation, the tight labour market's still there, isn't it?
Yeah, I mean, it wouldn't mind if it, loosened a little bit. I think James is what the economists would say.
Yeah, absolutely. All right, Anthony, we had our question earlier from Melanie from Victoria. If you've got a question you want to send in, you can email us at chanticleer@afr.com. You can also send us a question in audio form. Just record a voice memo on your phone and include your name and where you're from. And email it to us. And, of course, there's a little widget now on the Chanticleer articles on afr.com where you can submit a question through there. We're loving seeing all these questions. We'll get to as many as we can over the course of the following weeks, but keep them coming. All right, Anthony, it's another big week coming up. Long weekend. Enjoy having a Monday off. I won't ask you to help me with the statues. That's my job. But enjoy a bit of time with the family.
You too, James. Have a great weekend.
Thanks, everybody. Thanks for listening. We'll see you next week. If you like the podcast and you want to hear more, consider sharing or giving the podcast a review, as it helps other listeners find us. And don't forget to follow wherever you get your podcasts. At The Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to The Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thompson, and Anthony McDonald. It was produced by Alex Gow with assistance from Mandy Coulin. Our theme is by Alex Gow. The head of premium content is Fiona Buffini.
The Australian Financial Review.